Bitcoin is exploding right now, and the reasons that it's happening are actually incredible. First, we have to talk about the banking crisis, because this is a major factor as to why Bitcoin is actually pumping right now, and I'm here for this. I love it. 3 banks just collapsed, which is obviously not great because a lot of people are getting hurt in that process, but Bitcoin is pumping, so that's a bonus. Many more regional banks are on the brink of collapse right now. Banks got absolutely smashed in trading today on the stock markets, by the way. Some banks were down 70%. 70% in a day. What? And they say that crypto is risky. We can't have a Bitcoin ETF because it's too volatile. But this crap's fine, apparently. In fact, it was so bad today they had to actually halt trading on basically all small regional banking stocks. Like, you know it's bad, and like, just stop trading because it's too grim. I like to think that on a day when we have banks collapsing, bank stocks cratering, and Bitcoin's up like 20%, that somewhere, sitting on a beach, drinking a beer, having a little chuckle to himself, is Satoshi Nakamoto, just watching all the crazy unfold. Anyway, the banking crisis has led to something that no one was really expecting to happen this week, and that is that the Fed could stop raising interest rates, which is huge. The market right now is pricing in an almost 40% chance of no rate hike next week at the Federal Reserve meeting, because it is the rate hikes that are of course about to cause a mass extinction event for regional banks in the USA. In fact, the situation is so bad that the Fed is actually rolling out basically a backdoor money printing program by backstopping the entire banking system and saying that depositors will be covered at every bank no matter the cost. Just remember this, the Federal Reserve has an infinite supply of money.
There's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
And they're going to need it because the FDIC has just said there are $620 billion in unrealized losses at banks right now. What? And with bank stocks crashing, people rushing to get their money out of these smaller banks, move it up to bigger banks and JP Morgan, I would not be surprised to see more banking chaos in the weeks ahead. But the money printing has started already, and now we just need the Fed to actually stop those interest rate hikes and then of course lower them. But perhaps the clearest sign of a major economic shift underway is the collapse in bond yields. This is a big story. The 2-year Treasury bond is down over 1% in just the last few days, from 5.06% to 3.95%. That is an epic move for bond yields. Now, to be clear here, bond yields collapsing, that is going to send money back into stocks because people are going to start seeking better dividends, better returns. Rate hikes stopping, that pumps up the markets. And the Fed printing money to bail out hundreds of billions in losses at banks, that's going to flood liquidity into the markets, which is definitely bullish for risk assets. And that adds on to other liquidity coming in from China and Japan and the EU. And if that wasn't enough, Binance is buying $1 billion worth of Bitcoin, Ethereum, and BNB coins. Markets are already liking that announcement. Look, at the end of the day, markets love narratives, and Bitcoin has just been given one hell of a narrative to run with. Long Bitcoin, short the banks, it's all falling to pieces, and Bitcoin is here for you. Happily, I got my Bitcoin buy order filled at 20K, feeling pretty good about that right now. Now, before we talk about a wild chart, and of course some potential risks remaining in the market, because as exciting as it is, there still are risks out there. Just a reminder, if you're not yet signed up for BYBIT, then you are missing out on the best futures markets in the crypto game and some of the hottest altcoin spot markets as well. Join over 10 million traders and get up to $30,000 in deposit and trading bonuses, as well as exclusive fee discounts by using that link down below in the description. Now let's talk about the insane retest that Bitcoin just put in. During all that FUD, all the crazy, all the fear in the market, banks collapsing, stable coins depegging, Bitcoin actually did something pretty damn incredible. It put in a near perfect retest of both the 200-day simple moving average, which of course is our key bull bear line for Bitcoin, and it retested the orange downtrend line, also another very key area. And of course, it's also the previous highs from back in 2017, right? This is like a 3-for-1 mega bullish deal in terms of bullish breakout retests. Plus, as a bonus, we reclaimed the 50-day moving average, at least at the time of recording this video. These are some crazy technicals right here, and it adds a lot of fuel to that bull market kicking off thesis, right? There was a lot of doubt about it in this recent mayhem, but still though, risks do remain, and that is important to keep in mind, right? For example, regulators just took out the top 3 crypto banks in like a savage, like Red Wedding kind of move. In fact, Signature Bank, the bank that just collapsed, they took it out just because they hate crypto. There was not actually any reason to stop trading at this bank, but they killed a $110 billion bank just randomly on a Sunday because they wanted to send a message to cryptocurrency holders. Yikes. Yes, there are many other banks that can still fill that void for crypto, but they're going to be on the chopping block too. This has been a very clear attack on the industry, and this has been documented in Operation Choke Point 2.0, which is the White House's attack that they're running right now on the crypto industry by going after the banking on and off ramps for crypto. And look, as exciting as the Bitcoin pump is, and I'm here for this, I love the Bitcoin pump, there's a good chance that it's going to be a volatile few weeks in the equity markets, maybe even a few months in the equity markets, right? And that can bleed over into crypto. But Goldman Sachs, very interesting, thinks that this is it with the rate hikes, that the Fed is going to pivot. Goldman Sachs has told his clients, we think Fed officials are likely to prioritize financial stability for the time being, viewing it as the immediate problem, and that high inflation is more of a medium-term problem. All eyes now will be on the CPI release, which is happening just after I recorded this video. So by the time you watch this, you're probably going to see what the CPI release will have been. We'll talk about it, of course, in the next video. But it's widely expected that we're going to be seeing another strong drop on inflation. At least that's according to the Cleveland Fed, who's saying, yep, inflation's going down once again. Then, of course, we have the Federal Reserve meeting next week, which will really make or break markets. After all this mayhem, what is the Fed going to do? If the Fed raises rates by 0.5%, which some people had feared, in spite of everything that just happened, right? There could still be that possibility. That'd be chaos. 0.25%, widely expected right now. That would, basically be what people expect, but a no raise, oh boy. No raise, 0%, basically rate hikes stopping, that would send markets crazy. Okay, that's it. Subscribe now. See you next time.